Hey folks, welcome to this week's episode of Kickstart Your Real Estate Investing. This week, I wanted to talk about the tax benefits you can get by investing in real estate properties. As you all know, we are right now going through a tax cycle, right? So you must have all have gone and paid your taxes. You're done with your taxes right now. And when I did mine last week, I basically was pleasantly surprised, not so much surprised, but I knew this was going to happen, is that I have multiple cash flowing properties, all making good money, good cash flow, and I end up paying $0 in taxes. Yeah, you heard it right, $0. And the reason for that is because real estate investment is one of the best ways in which you can save on your taxes. So how do you go about it, right? So there are three ways in which real estate will help you save taxes. The first one is the expenses you incur for running your real estate property. So what does that mean? Hey, every time someone comes and mows your lawn, every time someone goes and basically fixes a leaking faucet in your rental property, you document that, and that is something you show as expenses against the income which you make. So your property taxes, the interest you pay on those particular loan you might have, the plumbing cost you might have, the lawn mowing, the snow removal, and so on, your stationery cost, and many of these other expenses, you can go ahead and deduct it. So even if you have a gross income coming in, there are a lot of expenses you can go and deduct against that gross income, which will bring your taxable income down, right? So that is the first way you have to do it. Obviously, the biggest thing to remember there is save all your receipts. You have to go and save your receipts. You have to document everything. Even if it's a mileage, if you're going and showing that rental property to 10 different tenants, you have to go and record your mileage, because then you can deduct that as part of your expenses for managing your rental property. The second way, and this is one of the most important ways in which it can help you, is the way of depreciation. So what is depreciation? Depreciation is nothing more than basically devaluing the asset on paper so that you can prepare for replacing that particular asset over a period of time. So for example, any residential properties you have, you can depreciate them in a straight line depreciation method for 29 and a half years. So what does that mean? Let's assume you have a property worth $300,000. So you're roughly looking at $10,000 per year where you can deduct them as an expense against your income which you have. And that, if you look at it, is a lot of money, because what it does is, imagine you have 5 properties, right? And you have $10,000 on each of the properties, which you can go and basically earmark against the income you have. So that's $50,000 worth of taxable income, which you're not paying taxes on. And now you can use that money and do some kind of fixing, or basically upgrading your property, or keeping that money aside and buying a new property, right? So in all these ways, depreciation allows you to reduce your taxable income. Your appreciating asset hasn't gone down in value. It's only on paper you're basically able to deduct the amount of money which your asset can be depreciated towards. Now, you have to keep one thing in mind. This is just a deferred way of basically not paying taxes right now, right? You still have to end up paying taxes on all the amount which you have depreciated now when you sell the asset. But that does not stop you from keeping the money now, using that money to grow your business and not pay taxes on it, okay? The third way in which you can basically take advantage of all the taxation laws for real estate investment properties is by something called as a 1031 exchange. So think of this scenario. You have an asset, you bought it for $200,000. After a few years, you're able to sell it for $300,000. Now you have $100,000 in capital gain. Now that capital gain would ideally be taxed at say 15% or 20%, whatever that particular tax bracket is for that particular asset class. You might end up paying that particular money towards your capital gain taxes. But there is something called as the 1031 exchange, which basically says that if you sell a property worth $300,000 and if you buy a comparable of the same price or higher, you do not pay capital gains on it. So what you can do is, you can sell a property worth $300,000 and then go around and buy another property which is $300,000 or more and use it for the same investment purposes as you did this property. You can now defer paying any capital gains on it. And here's the good part of it. You can do it indefinitely. That means that you do not pay capital gains on that property. When you buy the second property and you 1031 into a third property, you do not pay any capital gains on the second one along with the first one. And you can keep doing it till the end of the day you sell the final property. Or in some cases, you put it in a trust and your kids get it. They do not have to pay any taxes or capital gains on the property you had before. So folks, in this way, these three ways, you can really invest in real estate investment properties and save yourself a lot of taxes. Many real estate investors do not pay a single tax on any of the assets which are cash flowing right now, because they take the full use of all the benefits which the tax laws provide you in basically reducing your taxable income, whether it is by showing all your expenses, whether it is using depreciation, or when you sell it by doing a 1031 exchange. So the next time you think about investing in any property or investing in any asset, ask yourself, which of these things is going to give me the most taxable benefit? Is it going to be a mutual fund? Is it going to be a stock? Or is it going to be real estate? So think about it. This is the start of a new taxation cycle now. And if you're thinking of investing this year, think about real estate investing. It will give you a lot of tax benefit, which will allow you to reduce your taxable income, which in turn will reduce your taxes for you. Okay? So thanks folks, thanks for listening and hope you like it. And if you feel this was helpful, go ahead and like, subscribe to my channel, and I'll see you next week. Thank you. Bye.